Hey guys, hope you're all doing well and welcome back to Mark's Stock Review. Today's video is going to be on Li Auto. I'll be discussing how Li Auto is slightly different than some of the other Chinese automakers, what to make of the earnings report and the wild swings this week, some warning signs to consider, and finally why I'm overall bullish and my final take. And for those of you who are new, I keep my videos brief and to the point, so if you do find it helpful, please consider subscribing. That said, let's get right into it. So how is Li Auto different? Well, investing in Li Auto is not a pure EV play. Their vehicles are classified as new energy vehicles. They run on both battery and gasoline. And there's so many different abbreviations anymore, it almost gets confusing. So Li Auto is actually classified as the EREV, which is the extended range electric vehicles. The BEV is the pure electric vehicle. The PHEV uses electric motors and gas engines to operate, battery being plugged in to charge, and the HEV is the same thing as the PHEV, except the battery is not plugged in to charge. And Li Auto's main difference with the EREV is that the combustible motor does not directly power the wheels. Instead, it serves as a backup to charge up the electric battery. The two main advantages of the EREVs is that it ensures that the car can still run even if an EV charging station is not readily available, which is still an issue in China. It also solves the problem of battery technology restraints. This chart of the last couple days is going to be a great example of how EV stocks do not trade independently, with the exception of maybe Tesla. It starts on Thursday where XPeng had a really good earnings report and it caused Li Auto stock to actually gap up massively with anticipation that their earnings report on Friday would also be good. And as expected, the earnings report was good Friday morning for Li Auto. The savvy investors that got up early and bought shares already had a nice profit by mid-trading day. And before we finish out the trading day, let's take a look at the earnings report highlights, which justifies the excitement. So we have total revenue up 29%, not year over year, but more impressively, quarter over quarter. Vehicle sales up 28%. We got gross profit 91% and gross margin 19.8%. All very impressive, especially since it's quarter over quarter. So if investors were so bullish on Li Auto, what happened to the share price? Well, just took one tweet from Citron about a completely different company to send the share price of Li Auto down almost $10 in the matter of hours. So this is a great example of how Li Auto's share price is affected greatly, either positively or negatively, by other EV companies, especially ones in China. And here's why Li Auto's share price could be under pressure, at least in the short term. The first one being that the earnings report did reveal that expenses were increasing, plus the net loss increased by 42.2% quarter over quarter. Coupled with Citron's negative report on NIO could put pressure on Li Auto's share price, which, from my point of view, probably would provide a buying opportunity. And here's why. It's the CEO's comments and projections. He commented that the premium model is set to launch in 2022 and that deliveries are going to increase 27 to 38.6% for next quarter. That would be up 211% year over year. And he expects total revenue to increase 23.9% to 35.1% Q3 to Q4 of this year. And to be fair, I always include cautions, one being they're continuing to lose money, and two, the earnings report was unaudited. However, from my point of view, if the Citron's report on NIO continues to push the share price of Li Auto lower, it will present a buying opportunity. Hope you enjoyed the video. Let me know what you think of Li Auto in the comment section below. Feel free to subscribe if you haven't already. I'd appreciate it. Hope you guys have a great rest of your day, and I'll be talking to you soon.